All right, team, welcome back to the Ask Maddie Show. We are going to provide you an amazing show today. You guys are bringing some great questions, asking about the greater markets, looking at S&P, Bitcoin, and our altcoins. We're going to answer what is going to happen if we see a bear market in the stock market. Bitcoin follows, altcoin follows. Isn't it kind of over? We have our bags packed, but where are they going to go? So you guys have some worried questions right now. I was telling Matt before the show, I'm a little bit tired of this day-to-day monotony, and I kind of just want to get moving to higher prices, which is probably how you guys feel as well. So maybe we could talk about that a little bit in the show today. You guys are also asking which coins do you not see making it next time around, whatever that means. If you guys were to start a portfolio, what specific cryptos would you buy, and can we get an update on API3? This is the Ask Maddie Show. Matt, before we get into the content today, I think it's very important the team knows about our crypto education platform and what we do and what we don't do.
Yeah, so step one, what we don't do, I guess, is a little easier because that's pretty short. We don't do, hey, here's 500 trades a week, or we're going to make you rich overnight, or we're going to give you financial advice. We don't do any of that. But what we do at Cryptocharge is we give you guys 5 live updates a week. That includes an update from my business partner, Dan, on Tuesdays, who covers the macro, inflation, the Fed, all the things you guys need to know outside of immediately crypto. We take a look at the charts. We take a look at stock market, metals, a whole lot of stuff outside of just crypto. We have our learning center where you guys are able to get a whole bunch of quick start resources. We have our coin library. We have analysis that's updated regularly with entries, multi-step exits, all the good stuff. And we tie it all together with our Discord community, which is part of your membership where you guys can ask questions. Obviously got important updates, information, and meet other people that are actually, taking this journey together of becoming a self-investor. So with code YouTube, you guys can get 30 days free, absolutely risk-free, 30 days free. And then also 50% off. So it comes out to $49 a month or $4.99 for the year with code YouTube. So make sure you guys use that at checkout.
Link will be pinned in the comment section down below, team, so go check that out. Let's get into the hot takes, the questions of today. Matt, are you ready?
Let's do it.
Max says, can we get an update on API3?
Sure. So API3 chart-wise has seen some crazy volatility, which it always has. We always call in our group API3 the wild child. I mean, Zcash isn't far behind, but I feel like API3 moves a lot more violently. That also is attributed to market capitalization, which is very small here. We're talking about sub 100 million. So those generally have some more volatility. But again, a lot of the money that is made, that when you see people talking about, hey, I made this 20x, I made the 30x, I made the 15x even, a lot of that has to do with buying at smaller market capitalizations because it requires a lot less money to make those 10x's, 15x's possible. And in this case, we all know that even $1 billion in the crypto space is chump change in the grand scheme. So, for something like API3, all you need is about $1 billion for a 10x from here, which is crazy to think about. But let's take a look at what's happening with API3 right now. We're on a 3-day chart, just so we can look at a little bit more data. We had a big consolidation when we had the initial launch here for KuCoin back here from 2021 all the way through 22. Obviously, as the bear market set in, we saw some of that, corrective behavior set in. We saw a new floor being built in there. And we actually cracked that floor. And I know a lot of people got concerned, but it was just like API3 always moves. She's very surprising. She's a wild girl. But you guys can see that you had this floor of support that was built from 22. You kind of dug a couple new lows in here and then saw a reversal here in February of last year, which we saw a lot of alts do. Obviously worked its way back down. And then we had that big sell-off, right? We had the sell-off over here in February. You saw a very asymmetrical sell-off in API3. What I actually did in this instance, as we were down here towards almost 50 cents, is I took all the DCA I was doing with other stuff, even though other stuff I was still helping the averages, and I completely focused on API3 down at these prices. And then once we saw this crazy reversal, and again, as we saw the asymmetrical sell-off, we saw an asymmetrical rally to the upside. So from that low here on March 11 to the high, which was about 12 days, was about a 200% increase. Now, of course, we've given a lot of that back. And of course, that it's not going to be immune to the tariff news, not going to be immune to recessionary fears. But we obviously are seeing a little bit still more of stabilization here. So what I'm doing again is I've taken my foot off the gas with another DCA, and I'm back on the API3 DCA again now that we have come back down into these prices. And that's part of the consistent investor strategy. So one of the things I'm looking for here is if we can start to reclaim $1 here in the coming weeks to months, that will definitely fuel us up to see some more bullish moves in here. That'll gear us up to, at the minimum income test, towards 248 again, $5 or so. You also have these highs up in here towards 7. So risk to reward anywhere in this pocket, right? Let's just call it from current market. It's about a 250% move just to revisit the highs over here from December, filling out the $5 imbalance around a 6x. And then if you were to see the previous highs in there, it's almost an 8.8x. So again, this is the kind of opportunity that I like to see. both market cap wise as well as just opportunities for imbalances to be filled that are greater rewards than, let's say, ETH at $17,000.
Happy Coin 9 says, if we see an S&P bear market, BTC follows with alt follow, meaning we're screwed, right?
Yeah, I mean, look at it this way, right? Like if you have some sort of crazy economic uncertainty, let's say the tariff war explodes even worse and it's 1,000% tariffs on China, and we get I don't know, more war broke out. Like right, let's say like things get really really bad, right? The only safe place to hide is going to be like in treasury bonds, right? And those are still acting very asymmetrically compared to what they usually do. So like yeah, we can be afraid about crypto, but like unless you're going to look at your stock market through the same lens, like you're not going to sell your assets if that ends up being the case. You're just going to weather that event out. We can take a quick look at the S&P, and I actually talked about this on a previous show, and it's in the stock market. It's one of those big indicators I've been paying attention to on our live show. I actually cover the Dow, S&P, and NASDAQ every day, among the dollar and a handful of other things, just to give you guys a rounded picture of what's happening out there market-wise, not just being hyper-focused on your 3 or 4 assets that you care about. But when we look at the structure here in the S&P, is you had a big topping structure here in 21, right? So the Pico top here was like 4,800 points for the S&P. And then when we broke down, we obviously broke down for a while here. So let's just see the total amount of time from top to bottom here, about 293 days. So actually less than a year for the S&P to bottom. Interestingly enough, though, that bottoming structure happened on top of the previous topping structure from 2020. This is the general market cycle that you see with assets that are cyclical by nature. And Dow Jones has been doing this for over 100 years, right? So when we look at the S&P here, what is actually happening is I think we're doing that rebalancing move. So when you get these breakouts over local tops like this, and then you get breakouts, you guys can see that this breakout didn't come back and actually satiate the previous topping structure. We've pretty much done that now. Now, I will say as deep as 4,600, I would still be bullish on the S&P at that level. If you break below 46, then I think we're really cutting loose and we're looking at like 41, 37, right? That's when I think that things get really, really ugly. Wow. So as long as this band though here, you guys can see the 200-week moving average right around 4,670. You've got the low here around 4,600 and then 4,800, which is basically where we did that test. That's all safe territory to me. That's all an area where I'd like to see maybe another test down there, prove that this is a strong floor of support, and that could definitely gear us up for another leg higher. So as of right now, although traditional numbers say if XYZ market's down this much, we're in a bear market, I'm more of a belief of imbalances and cycle restructuring. And I believe that's what's happening right now is we are mid restructuring of this market, and we have more bull market to go. Again, I think that timeline perception wise, we've changed what we think should happen. This to me is perfection. It's art.
Maddie, is that something to do with you looking at the charts as not as black or white when you talk about like, a pullback in the stock market beyond 20%? Are you saying like, oh, we could actually see more move to the upside because of the imbalances, and that kind of dictates more than scholastic ideas of bear market and bull market for you? Is that what you're getting at?
I think that there's just a lot of academia out there that like doesn't really truly explain what's happening in the markets, because a lot of this is about market makers, it's about liquidity pockets, and it's about driving price back and forth to there. And there's always going to be a handful of narratives along the way, whether it's interest rate driven or it's geopolitical driven or tariff driven, right? You're always going to see those catalysts. But interestingly enough, price always seems to stop and find support in those previous pockets that need to be satiated, paired with, again, some sort of other catalyst that makes us be like, okay, cool, the stock market's ready to go, crypto's ready to go. But then you zoom out and you look at the charts and you're like, oh, like we were really just doing this rebalancing move the whole time. And you can look, of course, the catalyst in 2020 was different. The catalyst in 2022 is different. There was always a different catalyst that created that crashing structure, but they always come back and resatiate their previous tops. And then magically within a matter of weeks to months, you get some sort of reversal news and, everyone feels confident and good about the markets again, but not usually until you've seen the market really actually show a lot of strength. That's when people start to become bullish. What are we probably getting to when the market's at bullish? Probably another correction, right? So it's just the psychology of it all. And it's intended to make you doubt yourself, doubt your investments, doubt your timelines, all that stuff.
Maddie, we were talking about Katie Stockton before the show, and she kind of gave a different analysis on, we were talking about 10-year, we're talking about the stock market, Bitcoin. She even charted XRP the other day. And she gave a kind of different analysis than I have traditionally heard. And I wanted to get your analysis. What is the worst case scenario for crypto this bull run if we don't see, great performance in stock market, and then following suit with that, with Bitcoin being, precisely correlated like at 87% with the S&P, not seeing that big Bitcoin blow off top, which would then affect our altcoins?
Yeah. I think that even when we look at crypto on a greater structural level, like let's take all of our favorite coins out of it, right? Let's look at this through the most objective lens we can. If we look at just the total market cap, which just represents all the money that's in crypto, it doesn't represent one individual coin. Right now, there's $2.6 trillion in the crypto market. Reminding you guys again that the bear market lows was like sub 1 trillion. We're at like 700 billion down here at the lows. Really, really crazy. But what I've seen here again does not look like bearish behavior. And I look at some of the corrections in the flagging that's happened here on these higher time frames. I look at the size of this correction in here. Yes, it's been a little bit more of a violent correction, but nonetheless, what are we doing here, guys, right? Like in the grand scheme, tops. We're turning those tops, in my opinion, into a floor of support. And you can't suggest, in my opinion, that, oh, well, we're close to that support level, so we're probably going to break it and we're probably going to head back down. Yeah, I would agree that the macro sentiment is not fantastic, right? I think that the worst case scenario is that this is not a higher low, and maybe we break down towards 1.9, and then if 1.9 is lost, that's when hell breaks loose, and I think we would come down to like 1.25 trillion as our actual low in there. But again, from the bigger, grander scheme in here, you basically just tested the previous highs back here in March of last year. We had a huge correction. Let's just measure out this correction just so we have an idea time-wise as a team here. And we didn't kick another impulse off our 245 days. And the current correction from the previous top has been about 123 days. So less, about half the time that we were here in this correction from March of 24. So again, as long as we're able to maintain a lot of these, key levels, even this purple band that I've kind of identified here, I think we're still in a place of strength overall. So yeah, we can be, looking at all these different elements and try to forecast exactly when and how and short term, long term. For me, we could consolidate here for another 6 months, even though it's not what I want. As long as we're consolidating and creating a higher low, I'm good with it, and that's still healthy to the market. So main reason why I really don't do a lot of timeline stuff, and I'm more structurally oriented, because this is going to be the better guide, the better compass, the better North Star.
That's very good analysis right there, Maddie. And I think that's something like just kind of tying it back into Cryptocharge. I think that's something you're going to get at Cryptocharge rather than everywhere else, is you're going to learn how to become your own self-directed investor, but you're going to become less emotional. And that's very important, because when you listen to other people, they have to put their emotions into it, because they're managing mostly people's money. It's like there's people out there, I'm not going to name names, that manage other people's money. And that's very different than you managing your money. All right. They go in and they figure out, they do a little risk assessment, and they figure out what's your risk tolerance. And they also don't want to be dealing with customers that are going to be coming back and saying, what's happening to my money? What's happening to my money? Like, people don't want to be doing that. I think Maddie, you even talked about that happened with you early in Cryptocharge, where that might have been a possibility, but then you realize it's like, dude, these people can't control their emotions, and so it's not even worth it at the end of the day if I'm waking up at 4 a.m. and getting texts from people hounding me about their portfolio. So it's not even worth the 2% management fee at that point. So team, I think it's very different, and I think it's very helpful that you realize it's like, just with that analysis Maddie just gave, even talking about worst case scenario that might be in your mind, where it's like the next 6 months, it's just going to be brutal in Bitcoin right here, where we might trade sideways. Well, what does that mean? What should that mean for your investments? That means buying opportunities. That means you should be taking advantage of that. And Maddie, I think that's like stripping the emotion out. What is the chart telling us? Well, we could hang around these prices for a lot longer than what we thought. Now, what are you going to do with that? Are you going to sit and complain about it? You're going to talk about, what can we do? You're going to go on Twitter and complain about this current administration, or are you going to take your money and invest it accordingly into the assets you believe in? And so I think that's pretty profound on a greater level there. I know that was a little bit of a rant there, but I just think that's important for your average person, Maddie, because when they hear these people come out and they talk about, these bearish scenarios, they really get emotional.
Definitely. And it's so easy to get stuck in that emotional sentiment. Like, if you guys even think about where we were sentiment wise, let's say even 2 months ago, sentiment was still relatively high, right? There was obviously still corrections, but I would say it was significantly higher than it is now. However, prices today are actually a lot better than they were even at the top of this month. So we had the low set here at 2.3 trillion. We're up 13% from where we were just a couple weeks ago for total market cap right now. And sentiment, I feel is worse right now, which is so interesting. But yeah, it's super important that you guys have this big macro plan. You guys set a budget and a tolerance that makes sense for yourself. And it's easier to let this be the thing that makes your decisions for you instead of all of the noise. That's really what a lot of it is to me. It's just chatter. And it distracts you from emotionlessly based decision making.
Yeah, team, everyone's going to be bullish when the chart is bullish, and most people are going to be bearish when the chart is bearish. And we want to do the inverse here, all right? We want to be bullish when the chart is bearish. What do we mean by that? We're buying in bearish territory. We're buying when the stock market pulls 20%. We're buying when Bitcoin or these altcoins are sitting in their value zones. That's when we want to be quote unquote bears, and we want to be bearish when we see the topping structures, when everyone's saying, oh, 200k 300k Bitcoin. That's when we're selling. Okay, so we kind of just do the inverse, because I noticed this week. You see these traditional people, they just go with the flow, and they give their projections very vague, and they talk about their charts, and they say, oh yeah, well, if this happens, if we see Bitcoin go up, yeah, maybe we'll adjust our approach to that. And you just cannot invest that way. That's not good for your investor. You need to be doing the opposite. We went so off track here. Let's go back to the questions. Betty the Jet says XRP has the most ETF applications. Do you think it will be the first among the rest? So among like Solana and the others.
Oh, okay. All right. I'm glad we clarified that question, because I was thinking, I was like,
right.
Pro Shares, Grayscale, 21 Shares, Canary Capital.
Yeah,
It could be any of them. But there are a lot of big names with their hats in the ring for an XRP ETF, and a lot of names out there that already have other crypto or digitally based ETFs in their offerings. So I think that it's a very good sign that we will see it soon. I mean, we have resolution in the Ripple case. I think that is a pretty good indicator. I don't even know how the SEC would justify sitting on those applications when there's just a plethora of court documents to be like, this is quite literally what XRP is to its bone. This is a deeply studied multi-year case. Here's all the info. And then them still being like, I don't think that's going to be the case. So I think we'll probably get something here very soon. And again, guys, I really want you guys to remember, as these dates come by, there's always like I better get in before the ETF approval. I've seen it happen both ways. I've seen it sell off after an ETF approval. I've seen the pump after an ETF approval. If you want more of that coin, you like the price, get it, but do not buy based strictly off of like ETF approvals are next week. Obviously, guys, like if that was the case, and like we had every time they pumped, everyone would be rich, right? Everyone would be leveraged long 24 hours before the event, because they would just become very wealthy very quickly. So make sure you're investing based on a true investing schedule and strategy, not ever based on like individual narratives. Or even if you guys see like I've been seeing like ISO 2022 tokens, the switch is happening in June or something like that. You guys need to get into all these ISO tokens, and I'm like, what are you talking about? Like it just that, by the way, guys, means that it's just compliant with the existing messaging system that we use to send money around the world. So it doesn't mean that, hey, by June we flipped to Algorand, we flipped to XRP, and we're no longer using traditional rails. Like that's not the thing. So just stay focused, guys. Head down.
Yeah, good advice there. We need to go back to the if-then statements. If this happens, then I'll do that. Matt, don't you think? I mean, XRP has like the most applications right now for a digital asset, well beyond, I believe, Solana and Sui and the other cryptos out there. And then we saw an ETF approval in Brazil. So I don't know how this could shake up, but do you think XRP will be, other than Bitcoin and Ethereum, be the first altcoin to see approval?
I think it's possible. It's also possible we just see multiple coins same day, right? Like you could see multiple in the same day. Like, and generally too, like once you get one approval, usually you get all the rest of them approved, because they all know what everyone's applications look like, and they all kind of do a little copy paste to make sure that there's like a uniform filing, and we get approvals. So I don't know. XRP I think probably could go first, but who knows? Yeah. I think it's a question that's really doesn't have a lot of data to prove anything other than number of applications.
Right. Matthew says, which coins do you see not making it next time around?
I mean, hopefully Toilet and Butthole and just all of these coins that are not anything's, right? Yeah, it's so crazy, and I think that people should be able to buy whatever they want, right? Like if you guys want to throw your money at something and you enjoy the AI video someone made, and you want to buy the coin because you like the marketing, fine. Like I think that people should be able to buy stuff even if it's completely useless. But I hope that we do get some regulation in that, or at least some disclosures that have to go out to purchasers so they know exactly what they own, and aren't made these false promises, or and some of it too is just degenerate gambling, and people know that it's absolute crap, and they want to do it anyway. So I think that I hope that those move on the way out, because I think that they're always going to be a detriment to the space. They're always going to cheapen the space, and they pose risk, because it creates this awful narrative when people hear about all the rug pulls, right? Nobody talks about where XRP and HBAR is at, or other legitimate assets are at compared to their bear market lows. But you do hear about every scam coin out there on the news. You hear about all the bad experiences, and I think meme coins just honestly elevate that to a terribly high level. So I hope that those do, get washed out, or at least some of them get washed out. Maybe people become a little bit more wise. Maybe it becomes a little bit more difficult to just spit up a new token and just start to receive money from these garbage tokens. But we'll see. That's one thing I hope doesn't make it this time around.
Right. All right, team, we are out of time today. Thank you for joining us. If you got some value today, make sure you like this video. Do not leave this video without liking it. Please help the boys out here. If you have any other questions, you can leave them in the comment section down below. I was reading some of your guys' questions, and we didn't talk about Casper today. But Matt, we're getting dragged in the comment section about some of our Casper stance still. Like, people are saying, oh, I sold my Casper a long time ago, or blah, blah, blah. Why are you guys still talking about Casper? Team, we're going to see it all the way through. We're going to see it to the end of this bull run. I know, Matt, and we're just like we're talking about in the middle of the show here, everyone's bearish when the chart is bearish, okay? And so we don't want to be like that. We want to be different than the other people out there, all right? You can see that the chart looks bearish, all right? We don't have to tell you that. And so, some of our goal here is to buy when the chart looks weak. And so, I don't know, Matt, did you have any comments? Wrap up with some Casper comments right here.
Guys, we literally have a huge mainnet upgrade that's due pretty much any day now. It's fully completed on the testnet. I feel like we've brought you guys a lot of just research-based stuff with our 2 very in-depth interviews with Michael Stoyer, CTO over there. And again, we do that not because we need you guys to buy anything. Like, we care a lot about education. That's our entire thesis at Cryptocharge, and why we don't take partnerships, because we want to be able to objectively share with you guys what we're invested in. So, if you guys read all of that and you guys, hear all the information, you understand what's happening with the protocol, you understand what it is you're investing in, and you still don't like it, then just don't invest, right? But if you're like, oh, hey, these guys like Casper, and I'm going to, go all in on one asset because these guys like it, like, you're an idiot. Like, I'm sorry, but you are. Like, that's not my job to make sure that you feel comfortable with the risk appetite and market cap and tokenomics and how competitive it is in a vertical compared to stuff that you like, right? That's just not my damn job. So I do my best here on YouTube to give you guys a ton of information twice a week for free, just to give you guys a little bit of information about what's going on out there, and take some responsibility here, guys. You have to be 18 to buy crypto, so put on your big boy pants and either belly up to the bar and understand you're an investor, or admit you're a gambler and just go to the casino and play craps and hope for a big payout immediately. So, it is what it is. If you don't like it, there's the door, baby.
Yep. Matt, we spent 20 or 21 minutes not talking about anything related to Casper, and then unprovoked, I brought up Casper for us to yap about it. I just thought that was hilarious because that just goes back to everyone's like, these guys can't go one show without talking about Casper. It's like, well, I'm glad we're sticking to it, team. I'm glad we're not breaking that streak. So, team, again, like the video if you got something valuable today. We will see you guys next week. Bye.